Yo, what's going on everybody? Welcome back to another edition of CPA Reacts. Thanks for joining me. I'm gonna keep doing these videos because it's a good way to cover a lot of different topics in one video, and it's actual topics that people are actually asking for, not just me vomiting on you, deciding what you should know every week. So thanks for joining me. My name is Ryan, I'm a CPA. And of course, if you're new here, I'd love it if you consider subscribing to my channel. And if you're returning, thanks for watching again, and be sure to smash the like button if you think you will find this video helpful. So basically in this series, I go through the internets and I look for things people are asking or terrible advice, and I just comment on them. And I may be rude, but in the end, hopefully you all learn something. So here's the first one. I did TurboTax first year, then hired 2 different CPAs over the last 2 years, and I really don't feel like they're working for me. Really don't feel like they're doing all that they can do to reduce my taxes. And then down below, this person says, well, you have to find ones who are trying to save you money. Most of them are just doing what they were taught and clearly don't know how to get creative. So first of all, yes, it's true. There's a lot of CPAs out there that are just tax preparers. And there's a lot of tax preparers that do simply just that. I mean, just look at H&R Block, Liberty Tax, Jackson Hewitt. Those companies, you just bring your stuff in and they just input the data into the tax software and then spit out a tax return. Yes, that's true. That's the case for a lot of CPAs. There are other CPAs like our company that will be more proactive in at least, telling you the things that you should do to reduce your taxes. Now, keep in mind, when you are doing your taxes, in February or April, you're doing it for the previous year. That means the previous year has already ended. Okay, that means it's a lot more difficult to tax plan for the year that already ended. So the strategizing and the plans have to come during the actual tax year. So don't get mad at accountants or tax preparers that can't do anything for you because the year has already ended. Okay, there are a few things you can do. You can contribute to some retirement accounts. You have until April 15th to do that, or you can contribute to an HSA. Some of these things that you can do up through the tax deadline for the previous year, that would be possible. But most tax planning occurs in the middle of the year. So something to keep in mind, it would be your responsibility as a customer. Don't try to blame the accountants too. Take responsibility, reach out to your accountant in the middle of the year after tax season to see if there's anything that you can do. Now, a lot of CPAs, I don't blame them. They are not trained or they don't know about a lot of some of the creative stuff that can be done. Like we know strategies that can get W-2 employees, high earning W-2 employees, major tax deductions without actually contributing to retirement. And, it's something that most CPAs probably, they probably know the concepts, but you kind of need the right connections too to make it happen. So, don't blame the CPAs on that. The good ones especially are following tax codes and making sure your returns are done correctly. If you want proactive CPAs, be prepared to pay for it. So here's a question. I got a paper check for my refund amount and I don't have a bank account. Can anyone tell me where's a possibility to cash a check over $10,000? All right, so maybe I'm just supremely ignorant right now, but it's 2022. I didn't know there were still people running around without checking accounts. At least I didn't know there were adults, with responsibilities that are running around without checking accounts. I'm just completely ignorant on that. And, I could understand back in the 90s because there was a lot of those checks to cash places, check to cash places, or maybe even the early 2000s. But right now, to this person, I would just get a checking account, because without a checking account, you can't save for retirement. You can't invest your money. You can't, buy those little cryptos people are talking about. You just can't really do much without a checking account. So to this person, please just get a checking account. Don't go to a cash checking place and they charge you a fee to cash your own money. To get your own money into cash, they're gonna charge you a fee. So yeah, just get your own checking account. Did my taxes through TurboTax, applied for the advance, says it was approved. My tax return is showing 2 deposits. Okay, I'm gonna stop right there. It's a huge pet peeve of mine when people call their tax refund a return, because the return is the actual tax document that you have after you prepare it using all your tax forms. Okay, anyways. One for the Credit Karma spending and my bank account. Called Credit Karma and they're showing no advance. Called the bank, First Century Bank, they show no application. So I call TurboTax and they say since it's direct deposit, there's nothing they can do. Like, what the F? I told them one of these deposits is the Credit Karma account and they say it's not showing up as that. I am lost on what to do. Okay, so this person is talking about the products on TurboTax where if you are due a refund, TurboTax will issue you a refund advance through Credit Karma. So you're basically going to debt for your own money, and it's to get your money faster. You know, my last video, I said don't do this. That's stupid to go into debt for your own money. But I'm going to say it again. It's stupid to go into debt to get an advance on your own money that you're expecting, especially since it's from a debt company, a company that is advertising and promoting debt. Okay, the problem with TurboTax acquiring, Intuit acquiring Credit Karma is that now they're probably trying to sell you debt products throughout you doing your tax return. And now, since TurboTax and Credit Karma are one company, Credit Karma will have all of your personal information as you enter it through TurboTax. I don't have any evidence of that, obviously, but why the hell not? Why wouldn't they not do that? They're gonna have all your information and they're gonna sell you debt products, and they're already doing it with these tax refunds advances. And it's a dumb product. Like, if you're due a refund, just wait for your goddamn refund. Don't pay somebody else to issue you debt to get your refund, part of your refund faster. And it's your own money. So this person, I'm sorry that you are experiencing issues with Credit Karma and TurboTax. It's gonna be bound to happen when you're relying on these third-party folks for your own money. I'm not sure if anyone can advise me on this, but I received a letter from the IRS that I have not filed the 1065 tax return since 2018 for the business partnership. The business is husband and wife partnership, and income expenses were reported on the individual tax return instead of the 1065. Do I need to amend the individual tax returns and report income from K1 from business instead of the way it was originally reported directly? Okay, so when you apply for a business for a new EIN and you create an LLC, and on the IRS website you say, it's gonna ask you how many members are part of this LLC, which means how many owners. And if you answer 1, then you can file your LLC as a Schedule C. If you answer anything other than 1, 2 or more, then you have to file as a partnership. Now, if you're husband and wife and you live in a community property state, then you can file your LLC, your partnership LLC as 2 Schedule Cs on your personal tax return. However, before you do that, you have to make the election to do that. You have to elect for the LLC to be treated as a disregarded entity. You can't just start doing it. Because when you tell the IRS that you have 2 members of your LLC, they're gonna be expecting a partnership tax return, the 1065. So yes, if you're husband and wife, filing as a partnership, in my opinion, it's easier to just do the partnership tax return than to split the income and expenses up and give each spouse a Schedule C on the personal tax return. I find that a little more annoying and just tedious. So yeah, remember, if you file 2 members or more, you are expected to file a partnership tax return. Unless you are husband and wife living in a community property state, you have to tell the IRS that you're going to elect your LLC to file as a disregarded entity so that the IRS is not expecting any partnership tax returns. And then to this person, if you have not been filing partnership tax returns in the past few years, legally, yes, you are required to amend all your tax returns and then file the partnership tax return and then give yourself and your wife a K1 for those years. Some people might tell you that you can just file $0 returns for those years. And I guess while technically you can do that, you can file $0 partnership returns, I wouldn't do that because that's not actually what is going on here. You're legally, the IRS is expecting partnership tax returns, and you claim the business, if the money flowed through your business checking accounts through that business, then you should file as you're supposed to. All right, so that's all I got. Thanks for joining me today. Again, I'm going to keep this series going, especially through tax season. It's a little easier for me to do, and it's a good way to cover a bunch of stuff all at one time. So again, I would love it if you could consider subscribing to my channel, smash the like button. Take care for now, and I'll see you next time.
I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that say stick up. She picture perfect, so I told him I'm a flick up. Bill, I'm in the mood for a change up. I leave the city and return with my change up.